thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explaining what's driving impacts of what's going on with mortgage rates, whether it's coming from something like the economic calendar or headline news or geopolitical. Sometimes sentiment even changes, like good news is now bad news. And if you're somebody who's sitting there watching rates and get looking perplexed and a little confused as to what's going on here, hopefully these explanations will make a little bit more sense for you. And if you're looking to refinance a purchase, you may be kind of following rates and want to know when's a good time to kind of lock in or what to do next. With your planning and stuff. And hopefully these will give you the information that you need to make an informed decision for yourself. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if you're looking to refinance or purchase, we'd love to be able to talk to you on how we can help you out. But more than that, we'd like to be able to be a resource, answer any questions you might have. It could be questions about mortgage programs available or mortgage rates or anything else related to the mortgage industry that we could hopefully answer for you. So please feel free to reach out. In the meantime, why don't we jump right into our economic calendar? We don't have anything today specifically, but we do got some important data coming up this week. Tomorrow we'll get the PPI report, which is the Producer Price Index. Typically, it's not usually heavily impacted or have a lot of weight in the markets. However, because we've been so inflation focus, this one probably will have a little more weight tomorrow. This is inflation on the wholesale side of things in the wholesale sector. So that's why it doesn't typically get the weight on it, because a lot of times, even though their costs go up, they don't always get passed on to the consumer, and that's really where we look at. But again, we've been so inflation focused that this could definitely impact the markets in a major way tomorrow if it comes in really severely, as we saw the CPI report last week, how we reacted to the CPI report last week. Also, tomorrow is the FOMC meeting, the beginning of their 2-day. We do expect our first rate hike on Wednesday when they give their announcement. We're expecting about quarter basis points to the Fed funds rate, and as they announced last week, the tapering is complete. So we can expect mortgage rates long term to continue to rise. So they now are not in the market buying mortgage-backed securities, and then probably by summertime we could be starting to see a sell-off of mortgage-backed securities as they rebalance their portfolio as balance sheet, as well as basically had stated that they're looking to keep more likely treasuries versus any mortgage-backed securities also in the portfolio. So they're looking to get rid of basically mortgage-backed securities from their portfolio. So that could add a bit more pressure over the summertime with mortgage rates as well. So may want to prepare for the summer as we go looking forward. And then we do got a few other ones, like retail sales will be coming out Thursday with the weekly jobless claims and stuff like that. So with that stuff aside, we got headline news. Stocks are kind of mixed territory. We got the major thing that's affecting the market really is news. Even though there's a lot more intense fighting, which would have you've been a flight to safety in helping mortgage-backed securities, we had the opposite. There's some rumors going around that the peace talks, that there's been some progress on that they're moving forward. So there's some optimism there. And based on those rumors, the market's reacting on it. So unfortunately, there's a lot of people who don't think there's any merit to those bases. But in any case, obviously we all want to see peace and everything else going on there. It's just sometimes we don't always trust the information that's out there that comes in. So regardless, this is how the market's reacting, taking their cue from that. So mortgage-backed securities, as you can see here, we're down quite a bit. So that money is flowing back from mortgage-backed securities or bond market, treasuries, over back into the equities market. So Nasdaq is down, and that one's down primarily because a lot of those guys are high growth, and their borrowing costs are growing because, as you can see here, treasuries are up quite a bit. We're actually at new highs for the year or so. So we're up to 2.124 now, or 2.12, and that cuts into their profit taking. So that's why Nasdaq is down as they take a lot of the high growth stocks there. Another item here is inflation as well, because it was reports that Shenzhen in China is being locked down because of new COVID restrictions, so they're having lockdown, and that is a major player in terms of imports, exports, and there are concerns that, of course, that's going to wreak a little bit more havoc on the supply chains. And as we all can attest, the disruptions in the supply chains has increased our inflation, our costs out there with supply and demand. So that's also having some impact in the markets today as well. So a little bit about mortgage-backed securities. We did switch over. If you notice, we are at the 3.5 now. We were doing 3%, but with the rate of rates going up, it just makes more sense to start looking at the 3.5% coupon versus the 3% as we've been looking. So right now we're down 63 basis points, which translate a pretty good change in rates. So we're down quite a bit here, just over half a point. So we should easily see about 0.25% in the rate difference right now based on that looking like. So as you can see here, here's the volatility of the day. We were kind of going down a little bit, kind of sideways, and we dropped down. Now we've been kind of going kind of somewhat sideways, but with some pretty big fluctuations here as well. So especially this last few moments where we dropped from like around 50 some basis points down to 63 right now. So we had another big drop. And take a look back at the treasuries. Oops, sorry about that. The 1 month there. The treasuries here, again, at just, well, it looks like it's approaching again, going a little bit further. We're at 2.13 now, pretty much right there. All right, so lastly, we'll go over the average rate for conforming loan limits. These do have points built into them. So take that with a grain of salt. Everybody's quotes are usually a little bit different. So 30 years now at 4.29%, and the 15 years at 3.54%. So when you look at the rates, we quote an eighth of a percent, and so these got the points there's points built into these, so that's what kind of like an APR in a way. So that's kind of what we're seeing here with these rates here. So if you guys need any rate quotes, just please feel free to reach out. We can talk to you a little bit about where rates are at. In the meantime, if you guys like these videos, please help us out and smash that like button and share. We greatly like to get a little bit of exposure. It helps us out. We greatly appreciate you guys. And thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.